Good morning, sir. I'm Nurul Juliana binti Muhammad Sajhan. Today, our group will be presenting a comparative financial performance analysis of two semiconductor companies listed on Bursa Malaysia, which are Inari Emerton Berhad and Unisem M Berhad. Both companies operate in the outsourced semiconductor assembly and test, or known as OSAT industry, making them suitable for comparison. Our analysis covers 4 financial years, which are from 2021 to 2024, based on the data obtained from their audited annual reports. This presentation focuses on 4 areas: DuPont analysis, return on equity comparison, liquidity ratios, and leverage ratios. Before moving into the analysis, let's briefly look at the two companies. Inari Emerton Berhad is one of Malaysia's largest OSAT providers, focusing mainly on semiconductor assembly, testing, and packaging, especially radio frequency components used in smartphones. One of its major customers is Broadcom, and its financial year ends on the 31st of June. Unisem M Berhad is also a well-established OSAT provider involved in semiconductor assembly, packaging, and testing. It operates in Malaysia and also Chengdu, China, with its financial year ending on 31st December in 2022. Unisem divested its Chengdu operations, resulting in a one-time gain that affected its profitability for that year. With that company overview, let's move on to the financial analysis.
Hi everyone, my name is Nagishri Dayalan and I'm here to talk about the data collection of Inari Emerton Berhad and Unisem Berhad. To evaluate the financial performance of Inari Emerton Berhad and Unisem Berhad, we apply the two-point analysis model. This method breaks return on equity, or also known as ROE, into three components, which are net profit margin, asset turnover, and equity multiplier. By analyzing these components, we can understand whether a company's ROE is driven by profitability, efficiency in using assets, or financial leverage.
Hi, I'm Nisha and I will present the financial analysis of Inari Emerton Berhad based on the DuPont analysis from financial year 2021 until financial year 2024. First, let's look at the revenue trend. The revenue increased from Rm 1.43 billion in financial year 2021 to Rm 1.55 billion in financial year 2022, showing that the company experienced strong sales growth during that year. However, revenue declined in financial year 2023 before recovering slightly in financial year 2024 to around Rm 1.48 billion. This indicates that though the company faced challenges, it was able to regain some of its sales performance. Next is the net profit. Net profit reached its highest level of approximately Rm 391 million in financial year 2022. After that, it dropped significantly to about Rm 325 million in financial year 2023 and decreased further to around Rm 300 million in financial year 2024. This downward trend suggests that the company's profitability was affected, possibly due to higher operating costs or weaker market demand. Moving on to the net profit margin, the company maintained a relatively strong margin of above 20% throughout the 4 years. However, it gradually declined from 25.27% in financial year 2022 to 20.29% in financial year 2024. This means that although Inari Emerton was still profitable, it earned less profit from every ringgit of sales compared to previous years. For asset turnover, the ratio decreased from 0.87 times in financial year 2021 to 0.45 times in financial year 2024. This shows that the company became less efficient in utilizing its asset to generate revenue, meaning each ringgit invested in asset produce lower sales of time. The equity multiplier also declined from 1.27 times to 1.13 times, indicating that the company relied less on debt financing and had lower financial leverage. While this reduced financial risk, it may also lower the potential return to shareholders.
Alright, UNICEF Berhad from financial year 2021 to financial year 2024. The company recorded its strongest performance in financial year 2022, with revenue reaching RM 1.78 billion and net profit increasing to RM 385.4 million. This led to the highest net profit margin of 21.63% and an ROE of 16.82%. However, profitability deteriorated significantly in financial year 2023 and financial year 2024, as net profit margin fell to only 3.84% in financial year 2024. Asset turnover also declined slightly, indicating reduced efficiency in generating revenue from assets, while the equity multiplier remained relatively stable throughout the period. As a result, ROE dropped sharply from its financial year 2022 peak to just 2.62% in financial year 2024. Overall, the decline in ROE was mainly driven by the substantial reduction in profitability rather than changes in leverages. Thank you.
Assalamualaikum and a very good morning. My name is Muhammad Amazim Azmi and my metric card number is 312099. Today I will present about the 3.0, which is a comparative ROE analysis between the Inari Ematron and Unisem M Berhad for year 2021. Based on the analysis, Inari Ematron record the highest return on equity, ROE 25.57%, while USM Berhad record a lower ROE of 10.04%. This indicates that Inari Amatran was more effective in generating a profit from shareholder investment compared to the UNISEM. In other words, Inari was able to utilize shareholder equity more efficiently to create returns. The difference in ROE was mainly influenced by profitability performance. Inari Amatron achieved a higher net profit margin of 23.15%, which was almost double compared to Unisem that record 12.61%. This showed that Inari had a stronger ability to convert its revenue into the profit. Overall, we can see that the higher ROE suggests that Inari Amatron are more efficient management of shareholder fund compared to Unisem Berhad in 2021 year. Next, I will continue with the comparative ROE analysis for year 2022 between Inari Ematron and Unisem M Berhad. In 2022, Inari Ematron record a higher return on equity ROE of 20.12% compared to Unisem M Berhad, which record a 16.82%. This showed that Inari was still more effective in generating return from shareholder equity. However, the difference between both companies become a smaller compared to the year 2021. One of the reasons behind Inari ROE performance was due to a RM 100 for 1,041.9 million one-off deposit gain from the sale of its Chengdu operation, which contribute positively to its profitability. Meanwhile, Unisem show a smoother business operation and more stable profitability performance during the year. So we can see that Inari continue to achieve a higher ROE, indicating a better return to the shareholders, while Unisem demonstrate a more consistent operation performance in 2022. In 2023, the performance gap between the both companies became wider again. Inari Amatron maintained a higher ROE of 12.60%, while Unisem ROE decreased significantly to 3.34%. This indicates that Inari was still more effective in generating return from shareholder investment. Meanwhile, we can see that Unisem faced challenges in generating profit and creating a value for shareholder during this period. The decline in Unisem ROE was mainly due to challenge in the semiconductor industry. For example, a weaker global demand inventory adjustment, and also a slower recovery in end market. Although Inari performance also declined, the company maintained a stronger profitability. Its net profit margin (NPM) remained healthy at 24.00% compared to Unicem lower margin of 5.57%. In year 2024, both companies continue to face a pressure from the challenging semiconductor market environment, which result in a future decline in ROE performance. Inari Amateur record an ROE of 10.38%, which remains significantly higher compared to the Unicem and Berhad that only record 2.62%. The UNICEF experienced a weaker profitability where its net profit margin decreased future to 3.84%, which was below a sustainable level. Its current ratio also tightened to 1.60 times, indicating a more challenging financial position. Overall, Inari maintained a stronger financial performance and better shareholder return efficiency compared to UNICEF in 2024 years, while UNICEF continued to be affected by a weaker market condition.
Assalamualaikum and a good day everyone. My name is Nurajha and in this part I'll be talking about financial ratio analysis for financial year 2022 to financial year 2024, focusing on liquidity ratios and leverage ratios of Inari Amateur Berhad and Unicef Malaysian Berhad. The purpose of this analysis is to evaluate the short-term financial health and financial risk of this company. So now, we will start with the liquidity ratios to understand their short-term financial position. First liquidity ratio is the current ratio. This ratio measures a company's ability to pay its short-term obligation using current assets. From the graph, Inari shows a strong increasing trend from 6.72 times in 2022 to 7.88 times in 2024. Meanwhile, Unicef shows a decreasing trend from 2.32 times to 1.63 times. Overall, Inari has a stronger liquidity position compared to Unicef. Next, we move to the second liquidity ratio, which is the quick ratio. This ratio excludes inventory and focuses on more liquid assets. Inari shows an increasing trend from 6.31 times to 7.36 times, indicating strong liquidity. Unicef improved slightly in 2023 but dropped to 1.09 times in 2024. This shows that Inari has a stronger short-term financial flexibility. The third liquidity ratio is the cash ratio. This ratio measures the ability to pay short-term liabilities using only cash. Inari remains very strong with values above 5 times throughout the period, reaching 6.49 times in 2024. Unicef, however, declined to 0.61 times in 2024, indicating weaker cash availability. Therefore, Inari has a much stronger cash position. Next, we look at the net working capital to total assets and interval measure. For net working capital, Inari maintains around 70%, although it slightly decreased in financial year 2024. Unicef shows a continuous decline from 19.85% to 9.98%. In addition, for the interval measure, Inari can operate for around 823 days in 2022, 847 days in 2023, and 812 days in 2024 without additional cash inflow. Unicef shows a lower coverage of 292 days, 206 days, and 288 days, respectively. Overall, Inari shows stronger liquidity management. Next, we move to the leverage ratios. The first leverage ratio is the total debt ratios. Inari shows a decreasing trend from 0.1325 times or 13.25% in 2022 to 0.1069 times or 10.69% in 2024. Unicef shows an increasing trend from 19.95% to 22.27%. This indicates that Inari has lower financial risk compared to Unicef. The second leverage ratio is the debt equity ratio. Inari remains low and stable around 0.12 to 0.14 times. Unicef increased gradually shows higher reliance on debt financing. Next is the equity multiplier. Inari stays around 1.12 to 1.14 times, while Unisem is higher at around 1.25 to 1.29 times. This confirms that Unisem is more highly leveraged compared to Inari. The fourth leverage ratio is the long-term debt ratio. Inari records very low value, around 1%, showing minimal long-term borrowing. Unisem records higher value between 5 to 9%, indicating greater reliance on long-term debt. Overall, Inari has lower long-term financial risk. The fifth ratio is the time interest earned ratio. Inari shows a very high value of 432.51 times, 169.77 times, and 126.28 times, although decreasing over time. Unisem shows a much lower value of 49.67 times, 11.67 times, and 12.82 times. This shows that Inari has a much stronger ability to cover interest expense. The last ratio of the leverage ratio is the cash coverage ratio. Inari records a strong values of 530.10 times, 220.59 times, and 180.50 times. Unisem records a lower values of 85.29 times, 34.15 times, and 44.12 times. Overall, Inari has stronger cash flow stability and better ability to meet interest obligation. To summarize the leverage section, Inari has low and stable leverage, indicating lower financial risk. Unisem shows increasing leverage and higher dependence on debt, which increase financial risk. Therefore, Inari is more financially stable in terms of capital structure. In conclusion, Inari Amatram Berhad shows a stronger financial performance overall with high liquidity and low leverage. Unisem Malaysian Berhad shows a weaker liquidity and higher financial risk due to increasing debt levels. Overall, Inari in a more stable financial position compared to Unisem. I think that's all from my part. Thank you.
Thank you. I will conclude our presentation with the overall judgment and recommendations. Based on our analysis of profitability, ROE, liquidity and leverage ratios from financial year 2021 to 2024, Inari is the financially stronger company compared to Unisem. Inari consistently achieve higher profit margins, stronger returns to shareholders, excellent liquidity and very low debt levels. Although its ROE has decreased over the years, it is still supported by strong operating performance rather than excessive borrowing. This shows that the company remains financially stable and resilient. On the other hand, Unisem faces several challenges. Its profit margin and ROE declined significantly by financial year 2024, indicating weaker profitability. Its liquidity position also became tighter, which may create additional pressure on the company's financial performance. For recommendations, Inari should focus on improving asset efficiency and making better use of its large cash reserves through expansion acquisitions or higher returns on shareholders. For Unisem, management should prioritize reducing costs, improving operational efficiency, and expanding into higher margin service. The company should also avoid taking on additional debt until profitability improves. In conclusion, our analysis shows that Inari is currently the stronger and more financially resilient company. While Unisem remains a viable company, it needs significant improvements to strengthen its financial performance and create greater value for shareholders. Thank you for your attention.